All attendees are in listen-only mode.
Good afternoon, everyone, and thank you so much for joining us for today's webinar, R&D Tax Incentive Get Your Share. We've got our excellent presenter here ready to go, Kris Gale from Michael Johnson Associates. Just a quick note before we start. If you have any questions throughout the presentation, please just enter them into the questions box and we'll make sure we answer all your questions at the end of the presentation. And we will be recording this webinar, so it'll be available online within the next week or so post today. Alright, so just a brief introduction to who we are. So the Export Council of Australia is the peak industry body that looks after the international trade community. It's owned by its members and steered by a board and a council of industry specialists. The ECA is a not-for-profit organisation that aims to equip Australian businesses with the skills and capability required. We make representation to government on behalf of exporters to key decision makers. We undergo extensive research to identify and quantify the issues affecting the international trade community. We interface with and provide support to sector-specific associations and councils, and we deliver a range of activities that provide a forum for the exchange of ideas and knowledge, as well as events that reward excellence in export. So that's a brief introduction in case you're not aware of who we are. Now let me introduce you briefly to Michael Johnson Associates. MJA specialises in helping Australian companies obtain maximum value from R&D tax incentives and other government support for innovation. MJA are recognised as experts in this field with a proven track record over more than 25 years of working with companies to identify eligible R&D and commercialisation activities, prepare and maximise legitimate claims, manage and compliance reviews and audits, and develop grant strategies and prepare grant applications. So Kris is obviously the managing partner of MJA and is very well qualified to speak on these topics. So he joined MJA in 1987 and became partner in 1989. So Kris has more than 27 years worth of experience in providing advice on federal government programs that support innovation, making him one of the most experienced people in this area. So Kris is also a founding member of the federal government's R&D Tax Incentive National Reference Group. So that's quite an experienced speaker we have today, and we hope that you get a lot out of this presentation. And as I mentioned, please feel free to ask any questions and we'll get to them at the end. So I'll hand over to Kris and let him go from here. Thank you.
Thanks very much, Stacey, and thank you for that introduction. I'm not sure about excellent presenter. I'm definitely a presenter, but I'll leave excellent up for others to decide. As Stacey's indicated, I'm here to talk to you about the Research and Development Tax Incentive, which is a federal government program that's now been available over approximately the last 2.5 to 3 years, and it replaced a previous program, which was the Research and Development Tax Concession. In essence, the programs are very similar, but there are distinct differences, and we might touch on one or two of those this afternoon. Very, very straightforward. Get Your Share is around making sure that you strategically use this program as part of your innovation funding strategy, and I'll explain a little bit about what I mean about that as we go through. And I was asked to come up with 5 key issues to consider, and I want to make those real-time issues. The program has gone through a transition from the old concession to the new incentive, and we're now budget depending, and I think everybody's saying federal budget depending at the moment. I think we're moving into a period of consolidation, so we probably have a reasonably good grip now on what the program is about, what's required, and if we can understand some key issues, which I'll highlight as we go along and summarise at the end, I hope will inform you about how to best take a strategic approach to this program. This is the agenda today. I want to look at the program in an overview sense and comment about some of the particular issues that relate to the program in the context of that overview, looking at things like what's the benefit involved, who can apply, how is this administered at a federal level. The 4th dot point there under overview is the definition of R&D activities. It is the critical question in the program. Understanding what qualifies as eligible R&D determines everything else in relation to your claim. So we might dwell on that section for a little bit. A new measure in comparison to the old concession, the ability to get more certainty into the eligibility of the R&D program that you wish to conduct. It's done through a combination of what's called advanced and overseas findings, and very much a overview of the types of expenditure that you're able to access in terms of R&D and get the notional offsets that are offered under this program. Look briefly at what's required from a registration point of view. That's applying through AusIndustry. For those of you who are not familiar with this program, you're probably familiar with Austrade. AusIndustry is the equivalent in the industry department. What government guidance is available? There's plenty of it. I think the government itself would agree that it's probably not well marshalled or organised at the moment, so it can be a bit daunting if you go to the relevant websites. So how does one deal with that guidance and what does one take out of it? Question we're always asked, if I make a claim, what happens? Again, using export market development grants as an analogy, those of you who've accessed that program will realise that it gets rated by Austrade official before the grant is paid in its modulated form. This is a tax incentive, so it's self-assessment. So you identify and make the claim and you receive the benefit, which in some cases can be a generous cash refund, but that self-assessed claim is liable to audit by the regulators. So we'll look at that issue. And as by way of summary, I'll restate the 5 key issues that we identified as we went along. So unless Stacey tells me no, I'm going to continue, and we're off as soon as we get our first screen up. Okay, what are the, in an overall sense, of the benefits that this program provides? By identifying and claiming the R&D incentive, you add to your company's bottom line from profit after tax. So that's an additional return per dollar of R&D expenditure identified and claimed at either a 10 or a 15% level, an additional return to shareholders. It's a profit issue, and I'll explain the differences between 10 and 15% shortly. It offers an opportunity to improve your cash flow. If your company is paying tax, by identifying the eligible R&D activities and claiming the associated expenditure, you pay either 10 or 15 cents less tax per dollar of that identified expenditure. So it reduces the cheque that you send into the Australian Tax Office. In certain circumstances, if your company is small enough and in tax loss, you can get a cash refund for 45% of the R&D expenditure that you identify. So if I identified $100,000 of expenditure, you do the appropriate paperwork and you receive a refund cheque. And what a blessed thing that is from the Australian Tax Office, the Commissioner, for $45,000 in that example. So both those mechanisms improve your cash flow. You retain profit because you reduce your tax bill. In certain circumstances, you get a cash refund. It's actually better to look at this than rather as a tax measure in isolation, but it's really a dividend that you receive for putting yourself through a process of innovation. If innovation is the commercial application of ideas, and that commercial application is expressed in terms of new products and processes or improved products and processes, the government is returning to you an after-tax dividend for engaging in that risky activity. And I think that's a very good way to look at this program. If we invest in R&D, hopefully it generates new and improved products and processes that will help our businesses flourish, but in the short term, in some form, lower tax bill, cash refund, the government returns a dividend for you engaging in that activity. The final dot point, which I know sort of feels a bit new agey, would be my contention that this program, and I've been consulting in it since the old concession began back in 1985, I know you can't see me, but you'd be stunned how young I look despite this, is the behavioural additionality. It's around, I've spoken to literally thousands of people about what research and development is. And as I explained in this presentation, it's not just white coats and foaming test tubes. It's something more integral to businesses than that. And to get people who think that they're just doing their job to understand that the part of their job that's around the conception, design, delivery, execution, manufacture of new and improved products and processes is recognised as R&D and indeed innovation, that really changes conversations within companies about what they're doing. By providing this tax benefit, the government is trying to get companies to focus on innovation, which all, ironically, the research says is critical to the success of companies going forward. You'll have heard those paradigms. If you're not turning over half your products and processes every 5 years, you're probably heading out the back door. So I say that R&D tax is a somewhat misleading label. R&D is generally thought of as white coats and foaming test tubes, and as we'll see, it's something broader than that. And tax, with all due respect to all tax professionals around the world, and I guess I have to confess on this online environment that I am an R&D tax agent, it can be a bit of a turn-off. And what this is actually about bottom line matters, about profit, shareholder return, and that's why I encourage you to think of it as a dividend on your innovation. And that would be the first issue, is that R&D tax can sometimes isolate this issue to the tax manager within a company. The CEO for smaller companies will be interested, but sometimes the poor tax manager is left on their own to have to enthuse people to identify the claims and do the paperwork, or form an alliance with an advisor such as ourselves to do the work. This is a pervasive issue that all people in roles within companies should be interested in, particularly people responsible for technology. I mentioned there were two types of benefit. The program offers two notional deductions, to use the tax terminology, and these are regarded or called as offsets. There's a 40% non-refundable R&D tax offset for companies whose group turnover is greater than 20 million. If they're paying tax, they'll reduce their tax bill by 10 cents in the dollar. Under the old program, it was 7.5 cents, so this is the lift in value. However, if those companies are in loss, they increase their carry forward losses, so they will be able to access the benefit only when they start paying tax. It's about 3,000 companies currently using that program. There are 7,000 companies using the more generous 45% refundable R&D tax offset. This is for companies whose group turnover is 20 million. That's 4 times the size of the old rebate under the concession, where the restriction was company groups with a turnover of 5 million or less. For those companies who are in profit, for every dollar they identify and claim, they will in the end save 15 cents in tax. That's double the old basic benefit offered under the tax concession. And if they're in loss, they're able to get the full effect at the end of each financial year of those notional deductions, the 30 cents in the dollar tax plus the extra 15 cents. So that leads to a cash refund to the extent they're in loss of 45 cents in the dollar. As I said, my example, if you've got $500,000 of tax losses in your company, you're a startup developing a new exciting product, might be a new type of analytical device for the medical industry to identify diseases carried in blood, for example. You spend $100,000 on developing that piece of technology. You do the paperwork, you get a refund check from the tax office a few months after the end of the financial year for $45,000 because you've been on the front foot about registering your claim, getting your year-end financials together, and making specific application for the refund. Where you do get a refund, it is an offset, so if you have any other outstanding tax obligations, the money is applied to those, but if you've got no outstanding tax obligations, all that money comes back to you as a full refund check. So it's pretty exciting. And as I said, 7,000 companies are using that program, probably half, roughly, getting a cash refund as we speak. That word refund is critical. One of the things that we're seeing in the marketplace in the moment, and I think it's very, very important to understand, if you are working with advisors, you need to establish that they're registered as research and development tax agents. They have to have that registration to provide advice. Where you are in those circumstances where you're small enough, group turnover less than $20 million, and you're doing eligible R&D, and by the way, you can claim as much under this offset as you're doing. There's no cap as there used to be under the old program. The old program had a $1 or a $2 million cap. This is uncapped. If you're doing $10 million of R&D, you're eligible for a $4.5 million refund. So it's very generous. It is a refund. There are some commentators and some opinions, and perhaps sometimes when you look at some of the promotional material the government's generating, there's some misconception that this is some form of bridging finance. In other words, you do the R&D with third parties or your internal people, you raise the invoices which you intend to pay at some later stage, and then you make an application for the refund, get that refund, and start paying for the R&D that way. The refund is what it says. It's a refund. You have to have met a general tax provision which is called that the expenditure must be incurred. It's not enough simply to have raised the invoices. You must have an immediate and direct obligation to pay them. And I would counsel you against anyone who is suggesting that the first form of payment of the invoices is through the refundable offset itself. You must demonstrate you've already incurred that expenditure, and you're legitimately applying for a refund. So the second live issue is that the tax office in particular is concerned about companies who are using this program as an initial means for paying for their R&D rather than paying for their R&D, getting a refund as they go along to improve their cash flow to keep the R&D going. One side note about benefits. Right now at the big end of town, I'm not sure if any of our attendees are in that category, but there is legislation in front of Parliament to deny those companies with an aggregate assessable income of more than $20 billion from the 40% non-refundable offering. So this is the likes of BHP, Rio, Caltex, Woolworths, Shell, Telstra. The bill says you're going to do the R&D anyway, you've got deep pockets, therefore you're going to be excluded from the program. Right now that's gone through a Senate Economics Legislation Committee application or submission process, a hearing and a report. At the moment, the Labor Party in combination with the Greens would not vote for the bill, so it's not progressing at the moment, and it might get held over to the new Parliament, where we'll all have to get to know Clive Palmer a hell of a lot better than we thought we might have. So for those companies at the very, very big end of town, there is a bill that's on the deck at the moment that might knock them out of the program, and they would knock them out from the 1st of July last year. So we'll watch that with interest, and we're certainly watching the upcoming federal budget with lots of interest. The word is we don't expect great change, and certainly we don't expect great change for companies in the smaller end of the scale who are eligible for the 45% refundable offset. Who can apply? You need to be what's referred to, as you can see in the diagram there on the left, as an eligible R&D entity. There are two types of entities: Australian companies who are liable to pay income tax, your typical PTY limited or limited companies, they're eligible. Foreign companies are eligible in two cases, where they have an incorporated Australian resident for the purposes of taxation, or they are a non-resident but they have a double taxation agreement and a permanent establishment in Australia. And you can see in the dot footnote there that if you're a tax consolidated group, only your head company registers. In the old program, every entity doing R&D within a company group had to fill out a registration application. That's been brought into just one application for the entire company group. So it's a little bit more efficient on balance. You'll be delighted to say that I'm not going to go in any more detail about double tax agreements and the meaning of permanent establishments, and I'm guessing most of you most of the time will be Australian companies. Who's out? Non-corporate trusts, partnerships, individuals, income tax exempt entities like, I guess, not-for-profits and research bodies, CSIRO, charitable organisations. There is an entrenched view in government that to benefit from this program, you must be incorporated, and expenditure will only be able to be applied against this program from the date you are incorporated. Each financial year, you must spend at least $20,000, which is a very low threshold as a company group to be in the program at all. But as you can see, individuals, partnerships, tax-exempt entities are not part of this program. Who's responsible for the administration? Being tax, this program is unusual because there is a split administration. The tax office isn't the only body you deal with. In fact, the lead body you deal with, as I mentioned earlier, is AusIndustry. AusIndustry is the program delivery office of the Department of Industry, and it's responsible for about 30 funding programs. And I assume Hope's still responsible for about 30 funding programs, at least after the upcoming federal budget. They have a national office in Canberra, offices in all the state cities and territories, capitals I should say, and then throughout the regional network as well. They're responsible for the key question I highlighted at the beginning of this presentation: is it R&D? So we deal with them through a process that I also mentioned called registration, and we need to work with the people within that office. They're people with technical backgrounds. They won't necessarily have a technical background in your company's technology if they're looking at your claim, but they're the front line in assessing claims, whether they're eligible as R&D activities. There's a third party on that left side of the diagram, and that's the Innovation Australia Board. They are essentially private sector and some public sector appointees, and they make decisions. If there's an issue or a question about is it R&D, AusIndustry will make a recommendation, and ultimately it's the board that decides whether an R&D claim is eligible. They might delegate for smaller claims that to people within AusIndustry, But at the end of the day, if there's any appeal, you deal with a group called the Innovation Australia Board. They have a specific 7-person committee. There are a couple of private sector members short, so if you're interested in serving the public in this area, you might want to follow that up. But the committee in the board that makes decisions on the R&D tax incentive is referred to as the R&D Incentives Committee. I think Marlene Kogan from memory, Marlene Kanga from the, I think she's from the manufacturing side of the equation, is the new chairperson of that committee. Once it's eligible R&D, all the issues around the calculation of the claim, the substantiation of the expenditure that you're applying is administered by the Australian Tax Office. Historically, they've had a group called the Innovation Group in Adelaide, who are